You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, Natural Resource Specialist at the Oxford Club. His website, InvestmentU.com. Happy New Year, Sean.
Happy New Year to you, too.
Gold, are we going to see a big move there, especially since the stock exchanges have been losing value over the last few days?
Well, we certainly have seen money go into it. I don't know how much is actually tied into the fall in the global stock market, so that certainly could be part of it. But we always see this around this time of year. Normally, gold rallies. It used to rally in January and February. Last year, that rally really petered out in around mid-January. So if you're playing this rally, I think it is a playable rally. Just make sure that you're not married to anything, that's all, and you'll have to take profits when you have the profits.
Are you better off looking at bullion or at the gold miners themselves?
Well, some gold miners are doing extraordinarily well. Those ones which didn't make sense, like, say, when gold was, like, say, maybe $50 cheaper, but now they're marginally profitable. Those are the ones that are really taking off. And that's how you might want to pick your targets. Again, this isn't for long term. This is a short-term play. You are a speculator when you go into the gold markets now. But you can find some stocks that are very nicely leveraged. They aren't making sense when gold is $50 cheaper. They're making sense now. And so that's the kind of thing that I would really look for.
Saudi Arabia and Iran, of course, making some very angry noises over the mass executions that took place in Saudi Arabia. What's that going to do to oil, especially if they escalate their hostilities?
Yes, well, you bring up something which is important, which is the mass executions, and most importantly, they executed a Shiite cleric. But that's just the tip of the iceberg for those two. For one thing, Sunni is ruled by a Sunni family, and it's predominantly Sunni. However, the Shiite population is not small, though it has no voice in the government. And then Iran, they're Shiite, and so there's a strong religious split between the two. And they're also seeing things line up across the Middle East. When you see one on one side of a conflict, the other country will be on the other side of the conflict. Yemen, for example, is having a horrible civil war. Well, we have Saudi Arabia on one side of that conflict, Iran on the other. By the way, not too long ago, 4 Scud missiles, not all at the same time, but over, say, the course of a week, rocketed from Yemen into Saudi Arabia, launched by, we have to presume, Iran's allies in that country. And one killed a family. They, according to the Saudis, didn't hit any oil infrastructure. It's not like you're going to get any free flow of news out of there, though. But that's something that has to be on the table, too. It actually has turned into a shooting conflict, even though it's a low-level one. So you have that, and then you have plunging oil prices. This is making these countries quite grumpy, right? Because their budgets no longer work, and especially when it's a country like Saudi Arabia, which depends on oil for 70% of its revenues, and, I mean, really needs about $90 oil in order to make its budget. This is just a catastrophe. Now, sure, they can keep going for like a year and a half before things really hit the fan, but what if oil prices do stay low for a year and a half? I mean, I think there has to be some kind of thing happening in oil along there. Some kind of major supply will probably be cut off simply because it's a very chaotic business anyway. But if you're the people in Saudi Arabia making plans for the future, you can't count on that chaos. You might have to make some of your own. And so that's what we have here. I think many people expect things to cool down because, you know, everybody wants to make money. But there's a lot more to it in this. There's some real religious hatred, ethnic hatred, a lot of division between those two countries. And they hate each other more than probably Iran hates the United States. And that's saying a lot. So we really have to watch this situation, see how that really plays out. One thing that I would point out is that's not the only chaos spot in OPEC. Nigeria has 2 rebellions going on. one of which is Islamic in nature. The other is just because people are sick of getting stepped on and, like, shot and poisoned by the government soldiers. So there's a lot going on elsewhere in like OPEC, and so it looks for an extremely volatile year in like oil prices. However, one thing to really watch is that when all this stuff boiled up between Iran and Saudi Arabia, we saw prices rally briefly, but then what happened? They turned back lower. So there's no real relief for prices at this point, and I think price relief is really going to be more of a longer-term prospect unless we get one of those black swans I was just talking about.
One analyst said he's expecting $55, $60 oil by June. Is that realistic?
Not for me, unless there's a black swan event. I mean, now the people who are saying that are looking at the precipitous drop in oil investment, investment in pulling new oil out of the ground. And I can see their point. On the other hand, there are a lot of wells that have been drilled yet not completed. They're all set to go as soon as the price of oil pops up just a little bit. They'll be brought on because those companies that own that land would like to get those in production to keep their leases going. Because if you don't produce from land for a certain amount of time, you're going to lose your lease. So I think there's more supply ready to come on the market that will meet any rise in price. So I think, we could see a price spike because of a black swan event, but that'll be quickly met by new production, and then prices will go back down.
Are we going to see more bankruptcies in the oil sector, especially amongst the smaller producers?
Oh, I think you can almost count on that. And now, give the oil guys some credit. They've really done a nice job of extending and pretending for a long time and always thinking that, sunshine will be around the corner. And they have managed these, at least the good ones, manage them as well as they can. And then you can look like a company like, say, a Pioneer. Now, this is not an endorsement of Pioneer. I'm not saying you should go out and buy it. But the interesting thing about them is they are increasing production. They're doing more drilling. So some companies can make money at recent prices. Occidental is another example, but theirs is more interesting because they shifted from areas that really cost more money to ones that cost them a lot less money. And so they're reacting smartly to the crisis. But they're not planning on higher prices anytime soon, I don't think. And so I think the smarter companies, the ones you want to look at, are ones that are adjusting to the new reality, saying, you know what, maybe $45 oil will be an upper price limit in 2016. Ruling out the occasional price spikes. And so I have to learn to live within that area. And so I think that that person who was maybe calling for, higher oil by the middle of the year, if that happened, that would make a lot of my friends happy, but I don't see it happening.
Well, there has been a huge spike in SUV sales. June would be the start of the driving season. Is it possible just consumption alone will drive up prices?
Yeah, well, consumption has been rising, but not a lot. I don't really think so. If you want to speak about a price, why not speak about a price spike on the Venture or on the Toronto Stock Exchange? We've had some nice moves on those recently. There are speculative moves in everything. I don't think, though, we'll see a real spike in oil demand, gasoline demand. Now, you could see a spike lower in supply, and actually the Energy Information Administration in the U.S. recently expanded the amount of oil that it thinks will actually drop off from the shale plays in 2016 because it says prices are too low. A lot more oil production is really going to drop off in that area. But as much as we drop off, what happens in the Middle East? Iran, well, soon they'll have sanctions ending. They're going to bring 500,000 barrels per day of new production online very quickly, and they say an extra 1 million barrels per day over the course of a year. Iraq, they have new production, and as long as they can keep the peace in the areas that actually produce oil, they should be able to ramp up. And so you have these areas as well. Russia, they seem to keep producing more and more, when everyone expects their production to go down. They just find more and better ways to do it. Technology keeps improving all across the oil patch. So in the intermediate term, I don't see price relief.
What about alternative energy sources? Have low prices kind of put a lot of those projects on the back shelf, or are people still developing them?
You know, I would agree with you there, except that during the U.S. budget reconciliation that we had not too long ago, they decided to point a money cannon at the solar and wind areas and really give them a lot more tax relief for longer than many people thought was going to happen. So you have big buckets of money sloshing around solar, sloshing around wind. Those are not bad ways to play this, especially if you believe, as I believe, that this is actually going to be a tough year for the stock market. Last year was flat. I think this one could be flat to a little down, would not surprise me. And so in that kind of environment, you might want to look at the places where the U.S. government is actually going to shower money. If they're going to do that, you might want to grab a bucket and go over there and pick some stuff up.
Of course, a lot of silver is used in solar, and we really haven't seen silver prices rise that much. I know a lot of silver bugs were saying, well, it has to because a lot's being consumed.
That's what I hear from silver companies. I mean, you know, I haven't talked to them in the last week and a half because of Christmas and everything. But that's what they were just telling me right before Christmas. You know, we're seeing all the solar demand, solar use. It'll use more silver. I hope that works out. That would be wonderful. And I love it when something can be used in like clean energy because I like clean energy anyway. We just haven't seen that yet. So we'll probably, when we see it, we'll see it in the rearview mirror.
And, of course, those people who ordered their Tesla cars 4 years ago are still waiting for them.
Well, I hadn't heard that story, but the big factory is moving forward closer and closer. That'll start producing. That's going to suck up lithium when it starts, you know. They're going to have to make the deals to get that lithium. They have started making deals. They'll have to make more. And so the early stages of like that factory coming online could be quite volatile like lithium, because where is that supply going to come from? That could be quite interesting, I think.
Well, I think too, Tesla said they're going to develop a big battery for your home so you can use your solar panels to charge up a battery so you have lights at night, getting you off the grid. And here the local hydro company is saying we're going to hike rates about 9% a year for the foreseeable future.
Well, wouldn't that make you want to get off the grid then?
Exactly.
They're just, shooting themselves in the foot with that kind of action. And down in Nevada, this was the most outrageous thing. They recently said that the incentives people have received in solar, like over the past couple years, they just ruled, no, we're going to take those back. It's like a state decision. Of course, you can see the big state utilities are behind this. It's outrageous. You can't take back last year's incentives for solar. So I think people get outraged about that, and I think that the utilities, if they try and fight this wave, will not do well. That said, there are some utilities that are embracing solar and wind, and should continue to do quite well. And in a market that could be rocky, utilities do not look like a bad choice.
We'll have more with Sean Brodrick right after the break.
Unbelievable harmonies, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band, Saturday, January 9th at the Alex Goulden Hall. Buy online and save at ontourtickets.com. More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Sean Brodrick. Sean, China, the world's second largest economy, appears to be in a bit of trouble. Are they going to devalue the yuan again?
Well, they were slowly devaluing the yuan. In fact, that's one reason why they ran into that horrible trouble on the first trading day of the year. And in case any of your listeners don't know, China had its worst stock market collapse on the first trading day of the year of any first trading day that it's ever had, ever. It was just this past January 4th. So, here's the question. That was really bad. Will it continue? And is this just speculation, or is it a reflection of what's really going on in the Chinese economy. The growth in China is slowing down. But something that's really getting it, and this is kind of weird, is that in order to save the system, they put all these new checks in play, you know, like saying, well, all right, there's no more short selling, and people who own large positions can't sell them, and if things go down 7%, we're going to shut down for the entire day. And so this is making investors more panicked, right? No one wants to own that stuff. They'd rather go play in like some exchange where they can actually buy and sell and not worry that the police are going to haul them out of their office, right? And the circuit breakers that they have in China are so tight compared to what they have in the U.S. I mean, I believe in the U.S. it's like you need a 20% decline before they'll actually shut down for the whole day. But if it's just 7%, you know, if things are down, say, 3% and then 3.5%, and you're thinking, if this thing goes down as much as it already has, I won't be able to sell it all. So of course you're going to sell. You're going to throw your stuff out, you know? And so that's one of the problems is they've installed these like safeguards that are restricting the market and restricting the flow of capital. And so that's really making people extremely nervous. And at the same time, they're also cracking down on like all the shadow banking and all that stuff that many people were using to run trading accounts. Now, I think longer term that's a smart thing to do, but in the short term, that makes people really nervous, right? Because so many people are just new to trading there, and so they're not even sure if what they're doing really is legal. Some big important guy who they really respected just got dragged out by his wrist, you know? And so maybe what they're doing is legal, maybe they aren't. They might be going through some weird little corner banking shop and they have no idea whether it's legal or not. So this is freaking people out. And then you have, and I have to put this fact in there too, you can't trust statistics from the Chinese government. I mean, they're really horrible. And so you might kind of trust the trend in the statistics, but not the actual statistics. No, they're just making things up. And we know this because local officials, not only of cities, but of provinces and stuff, have come forward and admitted in this crackdown that has netted like thousands of people on corruption, that basically they were making up statistics because they didn't want, you know, the people they worked with to look bad. So they just made them up. And so it really is an empire of fraud. And so that isn't a place that actually looks good. But that said, you know, we got to say this every time we talk about it, right? Is that the Chinese government has $3.4 trillion in foreign exchange reserves. They've spent $0.4 trillion already, but they have $3.4 trillion in foreign exchange reserves that they will spend to save their market and their economy and their country from sliding into chaos. And they will spend it. They've already gone in and just scooped up all these shares of all these companies, and they're holders of last resort. They aren't going to sell. So if anybody thinks, well, I can go short China, good luck to you, dude, because there's 3.4 reasons why you might, 3.4 trillion reasons why you might be wrong. And, in fact, we saw them charge in on Tuesday. We saw the Chinese government charge in on Tuesday, just buy. So, I'm sure that gave, some comfort to people who could sell, but you might not want to be a buyer in the short term. That said, at some point China's going to get cheap enough. I mean, many of these companies are actually quite good, right? Especially the ones that are doing wireless in China and doing internet marketing and all that stuff. There's actually plenty of viable businesses in China. Their stocks can't be worthless. They're probably fine. So it'll get down to a point where things will be really, really cheap, and then you'll want to buy. And so I wouldn't rule out China forever, but in the short term, you might think of better places you can put your money to work.
Well, for the first time ever, China now has somebody, I think, in the top 10 wealthiest list in the world.
Yeah, well, let's just hope all his money is what he says it is.
And that he's paying off the right people.
Yeah, well, that's it. I mean, they've had dozens, and I mean dozens, of major corporate CEOs disappear. We can only assume that they did something really wrong and they were dragged off to avoid public disgrace, because they know if they disgrace these guys in public, it's just going to shake people's faith in the markets, right? I mean, they can't just arrest the board of some giant corporation and like beat them up with nightsticks and drag them through the streets. They're trying to do things quietly. But at the same time, that just lays the groundwork for a sense of fear and panic, because people have no idea what's going on. And so that's one of the reasons short term why you might want to just hang off a bit until they sort things out. Like I said, longer term, I'm sure China will be a great place to buy. It's just you'll probably get it at lower prices than you do right now.
Well, you say there, lots of these heads of companies have disappeared. Look at North America. The boss of Valiant gets pneumonia, and look what happened to their shares.
Yeah, well, I put that on complete speculation. That's one problem we have. It's not just people speculating. That's something people have to realize. There are algorithms that watch the news, and they wait for names to like turn up of like different, say, people and companies and all sorts of things, and they see if the news on them is like a plus or a minus, and they trade on it. These are algorithms making split-second decisions in like 1/100th of a second, and they control billions and billions of dollars. And that's driving at least a substantial minority portion of the trading every day. And that's making it much harder for us humans, because what they do to us doesn't really seem to make actual sense if you have a time frame beyond 5 minutes. But the machines don't have a time frame beyond 5 minutes. So that's something to watch out for on our side of the pond as well.
When the robots run the world, you get to see what happens, right?
Yeah, right. Well, they're running the world yet, but it's certainly something to keep your eye on.
Will the trouble in China continue to see more money poured into West Coast real estate, or will it dry up?
Oh, my God. It's amazing, especially when you consider that the Chinese have a strict limit on how much cash you can take out of the country in a year. I think it's something like silly, like $50,000, nothing at all, right? And yet we know Chinese are showing up here with millions and millions of dollars in suitcases. Did that money come out legally? I would say probably not. You know, and so at some point that party's going to end, because it's just based on illegal money. I don't know if the Chinese can stop the flow of cash. I think they'd like to. They'd really like to, because this is a problem for them. What they had been planning, by the way, and let's just get back to their currency for a bit. They had been planning like a slow devaluation in the first half of the year to boost the economy, which is on shaky ground, as we know. And then in the second half of the year, they were planning to ramp it up just to emphasize the strength in China and stuff like that. They actually laid this out in a plan. That was the plan. Just slow decline in the first half of the year, and then ramp up in like the end of like 2016. So that would have been great. Too bad that the Chinese bureaucrats are just as incompetent as any bureaucrats in the world, because that reality is not having any of that. Reality is saying you have to defend your currency, because anyone who can sell it right now is doing that because they don't want to own the yuan and they don't want to own Chinese stocks. So this is like throwing a huge wrench in the works for what they want to do there. And at the same time, so right now, what they've been doing is they've been selling foreign exchange reserves. You know, U.S. dollars, just sell, get those out the door, because we have to defend our own currency, so let's dump dollars and stuff like that. But at some point, that's going to switch back the other way. I don't know when that is. But that's one more layer of, like, volatility for this market, is that we have these currency wars going on right now. And so I think China really wants to defend its currency in the short term. In the intermediate term, like, say, through the first half of the year, we know this because they said so. They would like a slow decline. Will the market let them do that? I don't know. But then at the end of the year, they'd like to ramp things up again. So it'll be a wild time in the currency markets, that's for sure.
Well, as you know, China likes to do things with long-term plans. That's just 1 year. What's their plan for 5, 10, 15, 50 years?
Well, again, can they make these plans a reality, or is life going to just walk up and smack them right in the face? Their plan would be to have their currency replace the U.S. dollar as the currency of choice in international transactions. That's what they would love. And then they can really achieve China primacy and retake the place in the world that they believe they wrongly abandoned over 1,000 years ago. They would love to see that happen. Will it actually work out? You know, the best laid plans of mice and men often come to naught, and that can, when you're making really big plans, that can really not work out. Now, as for the U.S. dollar, we saw a very nice move. It outperformed so many things last year. It's not funny. At the end of last year, it was starting to fade a little bit because people got the interest rate hike they'd been looking for so long, and then they said, oh, you know, it's going to be 6 months before we get another one. But now, you know what? Now the dollar's starting to look a little strong again. Of course, you and I are saying this thing's probably going to tank in the next 12 hours and make me look like a complete loon. These things are very hard to predict short term. But my whole point is the same forces that were in place last year are still in place this year. One change might be is that we might see more growth in Europe than we really saw last year. Europe was such a slow growth thing, but they've had a nice currency situation for a while where the euro got really cheap, and that's boosting their exports. And you figure that has to be juicing up their economy, right? And so maybe we could see some growth out of Europe, and that could really change the dynamic. I'd be keeping an eye on that. But if that doesn't happen, then we're going to have the same thing that we had in 2015, where the U.S. dollar slowly inflates, and pretty much we have most of the same kind of dynamics in the market where, you know, we have these big swings, but the trend is pretty flat.
Sean, anything else you wanted to mention today?
No, that's pretty much it. You know, I mean, we've really covered a lot of stuff here. I think people could keep their eyes on Greece just when we get really tired of like all these things going on and like, you know, most people are thinking, oh, Greece, that's so 2015. Well, actually not. Because, yes, they've been really sorting things out with the European Union and the Troika and, you know, generally coming to agreements on how they're going to fix that economy. But guess what? Of the 1 million refugees that have shown up from the Middle East on Europe's doorstep, half of them are in Greece. And Greece doesn't have the money to support them, and the rest of Europe has been rather penurious about actually giving them the money and support they need to support those people. And so basically they've just been letting them walk across the border saying, get the hell out of here. Now, you know, the neighboring countries are saying, what the heck's going on? This is crazy. You have them there, you're supposed to support them. This could be a big issue because Greece has an unemployment rate around 24% already. It can't employ all these refugees. It is trying to do things for them. It just doesn't have the resources. And so this could be a real boiling point in Europe because of what's going on in Greece now. And the financial crisis in Greece is not fixed. That one that we saw last year, it's still a problem. They still can't pay their debts. So we could see a rerun of the Greece problem from last year, only this time it'll have the whole refugee crisis topped on it as a topping. So keep your eyes open for that.
I was going to say Greece, so 2015. How about 20 BC?
Yeah, yeah.
And their biggest export will be migrants.
Well, you know, I mean, I feel so sorry for the refugees. I really do. I don't blame them, whether they're fleeing Syria because of that awful civil war, or the rest of the Middle East because it's just a terrible place to live, or they just want, you know, economic freedom and like opportunity. I can understand that completely. But at the same time, you can see the point of the people in Europe. You know, they've actually built a nice little social democracy there, and then all these people start showing up who want all these services and stuff. That's really knocking the apple cart over. So I don't see a good solution for that anywhere, and we'll actually have to see how that works out.
Well, Canada, after doing very, very thorough security checks, has already welcomed several thousand Syrian refugees, and I have to say, they look like the happiest people in the world when they come through those gates at the airport. Yeah,
well, you guys are really putting us to shame, but it is, of course, an election year in the U.S., and things just get crazy. We have people down here who are obviously taking their daily dose of crazy pills, and, you know, I mean, just the things that come out of their mouths are nuts. And again, I understand people who are afraid. I understand the fear, because there are some crazy beliefs in this world, and you don't want more people with crazy beliefs in your country where you just like to relax and sit on your lawn and not get blown up. But it's just a tense situation all over the place. I don't expect it to get any better. I expect that we'll have more trouble. It's not like I'm looking for it, but if you think you've seen big moves in, say, Smith & Wesson and Sturm Ruger Stark so far, just wait until the next big shoot 'em up happens, because we are probably going to have one. I hate to say that, but we probably are. And so all the stocks that do well when that kind of thing happens, you know what? They'll ease off a little bit, and then we'll have another terrible incident, and then they'll go higher again. So that's just the way of it. In the meantime, just try and make it through this year. I don't expect this to be an easy year, but that doesn't mean it can't be profitable. People can do well. You just have to be in the right things.
Sean, thanks a lot for chatting with us.
Sure. It's always a pleasure. Thank you.
My guest has been Sean Brodrick, Natural Resource Specialist at the Oxford Club. His website, investmentu.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.